Hello, everybody, and welcome to week 4 of BA231. Hopefully, you've been enjoying class so far. I think that it's been going really well, and mostly everybody's doing good, which is great to see. So this week, to start off, I will go over what is due. And again, you can always find what is due. I list a lot of it in the announcements, or you can also just look here on the home page in the Module 4 section where I'm at right now. So we'll run through all of this. So this week we're going to be looking at chapters 11, 12, and 13. So we're going to be dealing a lot with how costs are handled this week and setting up budgets and tracking things, which is obviously very important to accounting. But you will also have some of your standard stuff that's due. You're going to have your discussion question and your lecture response. Let's talk about the discussion question here for a second. So with the discussion question, you're going to be talking about different types of costing methods. So as you go through, you want to talk about what you feel is appropriate and which one you think is going to be the most beneficial, as it says in here. Not just the easiest one to calculate, but which one you think will give you the most realistic picture of inventory. So there are 3 different types of methods out there that are commonly used. There's LIFO, FIFO, and the weighted average method. So LIFO is last in, first out. That's basically self-explanatory. It's just when something comes in, if it's the last thing that came in, it's going to be the first thing that's going to go out. Your FIFO is just the opposite. You're first in, you're first out. And your weighted average method is just where you're taking an average of everything on hand. So I want to explain a little bit about the difference between all of those and give you just a quick example of where some of them might be used to kind of get the ball rolling. So with your LIFO, your last in, first out, that's going to be at a place where it doesn't matter if it's the last one in and the first one out. So it's not going to be a perishable item. So it might be something where you just have inventory. You might be selling sheet metal, for example. Let's say that you have a stack of sheet metal there. You're just going to keep stacking it on top of each other. When somebody comes in, you're probably just going to grab the top piece and give it to them. You're not going to grab the bottom piece and give it to them. You may have your machine set up that way that you can, but that's an example. Your first in, first out is something where it's going to be perishable. So think about a grocery store. Would it be a good idea to not use FIFO for, say, bread? No, that has a shelf life. So the first or the oldest thing in needs to be the first one to go out. And then your weighted average is, that might be something with a landscaping company might use. I think of big companies around Utah, and let's say that you're just loading up piles and piles of dirt to resell or topsoil, whatever it is. You're not necessarily going to go out there and stack it all in a long row so you can get your first in and your first out. You might, but most oftentimes they're just going to be throwing it in a huge pile and then loading people up as they come in to get it. So you're not really going to be able to track it that specifically. You might be using the weighted average method. So as you're going through on these, keep that in mind. Don't just think about which one is the easiest to use. Feel free to give an example to support your opinion. A couple of things that I want to remind you about with the discussion questions is don't forget that you need to cite a reference. So when you're going out and you're doing research, please cite your source. Say, hey, here's where I got this from. Talk about it and explain it in your own words. Also, as mentioned right here in the bold letters, your initial post needs to be done before Wednesday at 11:59. It needs to be between 70 and 100 words, and then you need to have a minimum of 2 replies by Sunday at 11:59. And those also need to be between 70 and 100 words. I've had a few people reach out to me about that. Again, we're not necessarily counting the words just to make sure that you can put 70 words on a piece of paper. We're using the 70 words to encourage you to develop your thoughts, to get things figured out, and explain them to the class or in your response. And then another thing that I would encourage is if you want to disagree with somebody and say, hey, you like LIFO, I like FIFO, that's fine. By all means, we want to have a great discussion. Just please keep it respectful and say, maybe I can see your point, but here's my point. What do you think? Ask them like that. We want to have a good discussion. That's what makes these discussion forums really, honestly, a lot of fun. It makes the class a lot better for everybody. So that's our discussion question. And then the lecture response is watching this and posting on it. Everybody's been doing a pretty good job on that. Please, again, make sure that when you watch this, here, I'll pull it up. When you watch this, that you're meeting the word requirement is 150 words. So roughly 2 paragraphs, that's around half a page. Again, as you're going through, state what we talked about in here, what you learned. Don't just talk about what is in the 3 chapters, because otherwise we're not going to know if you watched the lecture or not. So be sure to meet that requirement. And then again, that is due by Wednesday at 11:59 for full points. If you don't get it done by Wednesday, still get it turned in. You'll get docked at least 20% for, well, 20% for it being late, depending on the completeness. But still, if you get everything right, 80% is a lot better than 0. So please get that in, even if it is late. And so this week, again, we'll be covering chapters 11, 12, and 13. As you can see right here, then there will be some practice tests or homework for you to work on. And then we've already talked about the discussion and the lecture response. And then next is the assignment. So let's pull this up. I'll briefly show you what is due, just to make sure everybody sees it. So you're going to have 1 exercise in chapter 11, 2 exercises in chapter 12, and 2 exercises in chapter 13 for a total of 5 assignments. If you ever have a question about what is due, let me know. I'd be happy to go over it with you, but it spells it out pretty clearly here. So next I want to get into the chapters a little bit. So with chapter 11, this is your cost, volume, profit analysis. So basically what you're going to want to do is you're going to look and see if you are making money or not. So some of the key things it's going to start out with here are variable and fixed costs and mixed costs. So if you don't understand what those are, that's going to throw off the rest of the chapter. So let's make sure that everybody understands what those are. So with your fixed costs, with your variable costs, let's start with that one. That's something that changes every month. So with that one, an easy example in your personal life might be your utilities. So your gas and electric. Your gas is going to go down in the summer and up in the winter. It's going to vary. Your electric is going to probably be just the opposite because of your AC unit. It's the same thing with a company. These companies have huge gas and electric bills, or they might have overhead costs that are going to fluctuate. Then you're going to have your fixed costs. Again, a personal example of this is with fixed costs might be your rent or your mortgage. If it's $1,000 a month, it's probably always going to be $1,000 a month as long as you have your set lease. So that's a fixed cost. It's the same thing with companies. They're going to have a fixed mortgage or a fixed rent. They might have a fixed payment for a forklift that they're renting or a truck that they're renting, something like that. And you're also going to have mixed costs. Mixed costs are pretty self-explanatory as you're going through, but an example of that I always remember one of my accounting professors using was setting up a line. So let's say that you're running a manufacturing company, and every time that you want to make this product, you have to set up the production line, and it's going to cost you $1,000. So it's going to cost you $1,000 just to set it up, and then you're going to have your variable costs on top of that, your labor, all of your other things. But if you make 1 unit, it costs $1,000 to set it up. If you make 20 units, it costs $1,000 to set it up. It's a fixed cost. All of your costs on top of that are going to be variable. So that's where the 1 versus the 20 unit are going to tack on to the variable cost, and that's how you come up with the mix. So in chapter 12, we're going to be talking about differential analysis and product pricing. So at this one, you're going to be looking at different options for your companies. So you're going to be looking at differential revenue, differential costs, differential income or loss. So you're going to be looking at, if I make this product and I discontinue it, is it going to help or hurt my bottom line? So an example of this, if you were just to go out and ask somebody that knows nothing about accounting and say, hey, I have this product line, the revenue from it is $800,000 a year, should I discontinue it? They're obviously going to say, well, no, that's bringing in $800,000, right? Well, now that you're going through accounting and you're seeing all of the costs that go into stuff like this, it's going to open your eyes and you're going to see that a little bit differently. Yeah, you're bringing in $800,000, but what if it's costing you $1 million to make that $800,000? Okay, you're losing $200,000. Is it really worth it? Probably not. You're probably going to want to discontinue that. Maybe you can go out and make a few tweaks and drop that $1 million down to $600,000. So now instead of losing $200,000, you're making $200,000. That's what this chapter is going to help you go over. It's going to look at, like I said, the example I just gave you is discontinuing a segment or a product. And then you're going to have manufacturer purchase, so a make or buy decision. The company that I audit right now does this all the time. They're always trying to say, hey, can we make this in-house cheaper or should we buy it? A lot of people think, well, if you can make it, you should make it because it's always going to be cheaper. Not necessarily. It might be cheaper to purchase it because another company might have economies of scale. You only want to make 20 of these items, but this company makes 200 of these items a day or whatever it is. they can probably make it a lot cheaper than what you can because they're already set up. They have the line, they have the people, the expertise, deals with suppliers. So there's a lot of things that go into that. So those are a couple of the highlights from that chapter. And then in chapter 13, you're going to be talking about budgeting and standard costs. So with budgeting and standard costs, you know, with your personal life, budgeting is very important. It's just as important with a company. They always have to start the year out with a budget to say, hey, here's our anticipated revenue, here's our anticipated expenses, because that's kind of going to give them their guideline for the year to say, here's what we're anticipating and making. And if they need to go out and get a loan or they need a plan for capital expenditures, all of these things are going to help them figure that out. So that's something that is really, really important to every one of them. You'll go over some of your objectives of budgeting, your human behavior in budgeting. Budgets have a huge impact on people. You know, you either love them or hate them. I guess it depends on which side of the coin you're on. But budgeting is very important. That company that I audit, they have people that's all they do is work on budgets. You'll get into some of the systems. You know, I graduated in 2006, so not that long ago. But I remember doing budgets for classes, and we had to do these huge, elaborate budgets in my master's program that were just Excel tab after Excel tab after Excel tab, and it was a real world example from the book. Now they have systems that'll just crank all of that stuff out for you. It's a lot easier to input. So technology has definitely played a huge role in that. Then you're going to be seeing how, like, you'll get into your master budgets, how it affects an income statement and a balance sheet. So before I click on the thing, I wanted to show you again with the homework. If you scroll to the bottom, you'll always have your exercises and problems here. I think everybody understands that I've been getting homework from everybody, but if you ever have a question about what is due or where to find it, by all means, reach out to us and let us know. So your chapter introduction here, it's going to talk a little bit about the effects of human behavior. We talked about that, all of your different budgeting systems. So with these chapters, you know, one of the good things about them, I like it has the learning objectives. So that's kind of going to give you a preview of, hey, here's what I'm going to be learning. And then it will start out with an example here. So on this one, it has Hendrick Motorsports, and it gets into them. They're a famous NASCAR company, and it talks about primary and secondary sponsorships and the revenues that they bring in and how it affects their budgets and all of that. And now I want to go over the templates quickly with the last little bit of time that we've got. So with chapter 11 is pretty straightforward. I filled a couple things out here to show you, which I think everybody understands. But if it's just a text box, when you click on this, you're going to be able to go through and select your label. So cost at high point is right. Let's say I switch it to one that's wrong. You're going to get that red asterisk that shows up, that little red mark. So always watch for that thing. I've had a couple of people that were kind of struggling with that at first, but I think they've got all that figured out. It'll be the same thing with the numbers here. So chapter 11, not a lot of data entry. That one's pretty straightforward. And then you're going to get over here to chapter 12 with this one. You're going to be dealing with your differential analysis reports. So the annual costs of the present machine, the new machine, if you get how it's going to impact it if you get a new one. So you're kind of going to be making a decision on what you want to do with that one. Then your next one on 1214. So proposal to sell to Rio Motors. So you're trying to decide if you're going to sell out to them. So you're going to go through, figure out all of your costs, and make your decision. On chapter 13, you're going to be dealing with your budgets. So again, pretty straightforward. When you go in here, you're going to have your answer. Be sure to select the correct answer. And then chapter 13 will be the same thing. You'll have that. You're going to go through. You're going to figure out all of your costs. So we went through those ones pretty quick, but if you have any questions about that, let me know. Again, I think you'll really like this week. You're going to get a lot of useful information that'll be helpful for when you go, you know, maybe out to a job interview or whatever it may be down the road. If somebody asks you a budget question, yes, you're not going to be a budget expert, but you can say that you know a little bit about them. You can speak intelligently about it. Little things like this are going to come in handy. I know when I was doing my interviews, just being able to draw from some of my accounting terms and relay things out really helps. So if you have any questions, please feel free to reach out to us and let us know. Thanks.